This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you this Monday morning from the CNBC TV 18 Motilal Oswal studios. As always, I am Prashant. With me, my colleagues Nigel and Sonia. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. And last 15 days of the calendar year, you know, there's festivities all around across the city. There's so much by way of celebrations happening. Yeah. And I think the market is also in celebratory mood, right? 21,000 was hit on the Nifty. And there are no indications of the stopping of this rally. Perhaps a pause, perhaps catching of its breath. But the uptrend seems to be very much intact.
Well, that's right. You know, things are looking good. The only fear is the consensus is that this market is going to go up across ages, across, everywhere you go. Everyone just talking about the market moving up. So at times, suddenly the markets could surprise you. But if you're buying it for the long term, then definitely you must participate on the upside.
Well, I think that's well said. And let's just, we got to live day by day, and we'll tell you what you need to know as we begin another trading session, another trading week. And it's looking good. Once again, it's looking good, not just from a local perspective. It's looked good for a while, irrespective of the global screen. But the global stuff is also not bad. So let's just start with telling you where we left off on Friday, right? Last week was massive. Same time, if you think back, rewind the clock exactly 1 week ago on Monday morning, we were coming out of that weekend with that massive victory for the BJP and Prime Minister Modi, and the market was looking exuberant. I mean, that day we got a 400-point move on the Nifty, almost 400-point move on the Nifty. And that sort of cumulatively, Friday to Friday, that is last week, the Nifty went up 3.5%, the Nifty Bank went up 5.5%. So these were very large moves. The up move is still on, right? But if you look at it on a day-to-day basis, last Thursday and Friday, there were intraday pullbacks. So nothing dramatic, but the momentum, which was kind of non-stop on Monday, Tuesday and Wednesday, it kind of faded a little bit. On Thursday specifically, Friday also looked flat to slightly lower. And then, of course, in the last 60, 90 minutes, there was that 70-point pullback that we had. But so that's what I'm saying, the up move is still on. Now to the global screen, it's pretty good on Friday. The Nasdaq ended about 0.5% higher. The 10-year was up about 8 basis points. The dollar index also went up, by the way. Dollar was largely strong against other global currencies. We're at about 104 on the US dollar. Now, the data which kind of led to this is the jobs number. US November jobs report was strong. I mean, by any metric. So you look at the payrolls number, which is the actual addition to jobs. You look at the unemployment rate. You look at the average hourly earnings. You can't really find chinks in that sense in the armor. So very good data. At the same time, importantly, you also had the University of Michigan inflation expectations, which came in weaker, right? So the jobs data is for November. The UMich survey is for December. That came in weaker at 3.1% compared to 4.3%, which was the consensus expectation. And the reason I say it is important that we got one sort of weakish data as well is because the market at the margin would have started to worry that all of the rate cuts which are priced in for 2024, starting, by the way, with some expecting a cut in March, will not happen if the data is weak. So that's why I'm saying that this inflation expectation is important. The Fed, by the way, the decision is on Wednesday. We will react to it on Thursday morning. The Fed is expected to leave rates unchanged. That was the expectation before the jobs data. I don't think it's changed, even though the jobs number has been strong. This will be, if they leave rates unchanged, the third straight meeting when, they've done so. But because of, this sort of a little bit of one strong and one weak kind of data point, the US CPI number, which we get on Tuesday, will become important because we will get that before the Fed decision on Wednesday. So the US CPI, in that sense, will be important to track tomorrow. Just one more data point, and this is important for the metals pack. Over the weekend, we got Chinese CPI numbers, which came in at minus 0.5%. I mean, that is weak. And it kind of is a sign of weak demand overall. Some are calling it deflation, and not just deflation in goods, but deflation in services as well. So something we will continue to talk about here over the next, couple of hours. For the Nifty, just to circle it all back to what it means, the upside target remains 2150 to about 21,100 levels, which have not changed since the last time we spoke about this on Friday. On the downside, the lows roughly of the last 3 days come in around the 20,850 level, which is about 100 points away from where we are. If that does not break, I would still say that there's unfinished business at about 21,100 in this leg up. So keep an eye out on that one. The lows at about 28.50. For the Nifty Bank, it broke above the swing high of 47,260. That happened on Thursday and on more definitively on Friday. The medium-term target for the Nifty Bank, again, stays unchanged. 47,700, 47,750 is that particular number, which is the medium-term rising trend line, which the Nifty Bank has got to get to. And the Nifty Bank, by the way, if last week is any indication and HDFC Bank is an indication, is only starting to get a little warmed up for perhaps bigger things. The GIFT Nifty is indicating an absolutely flat start, half a point change. Sonia.
Oh, this is a big week, right? I mean, there's lots happening this week. There's the US FOMC policy. There's a lot of IPOs coming out. There is the CPI data as well. So it's an action-packed week in terms of a lot of market cues. But what are we watching out for? Well, the big cue for me this week is, of course, the US Fed policy. Now, there is no expectation of any rate change this time around, but any indication of the easing of the monetary policy is something that the street will definitely latch on to. Whether it comes or not, time will tell. But, the commentary from the US FOMC, the US Fed officials will be crucial to watch. The big question, right? When will the Fed start easing their monetary policy? Something that the street has started to factor in already. The Nifty hit that 21,000 milestone last week. And given the cues that we have, you get a sense that this uptrend is something that can continue. Global cues are strong. The S&P 500 closed at a 2023 high. The Dow, in fact, was up 130 points on Friday. But this year so far, the Dow is up almost 10%. But look at the other indices. The S&P 500 is up 20% this year so far. The Nasdaq is up almost 38% this year. So it's been a super year for most of the US indices. There was large buying that we saw from foreign institutions on Friday as well, 3,600 crores. And put together, FIs have bought over 11,000 crores in the cash market so far in this month. You have IPOs as well coming through, right? So there's pencil maker DOMS. It's 1,200 crore IPO, opens day after tomorrow. So we'll keep an eye out on that. And there are plenty others in the primary market as well. But all in all, you'd have to say that this is an important week because you have the FOMC action. And the market could perhaps latch on to that and maybe build on to its uptrend.
Well, we've got a good start to December, Sonia. And in fact, the markets are bracing for a rather good end to 2023. And the Nifty Bank, that's going to play a very, very vital role because that's been off color for majority of 2023. But that's showing signs of coming back. The big cue today is this week is going to be the Fed's commentary. And as of now, the street has started cheering good data. That's not what we saw in the past. So now in fact, it appears that the street, from being a little bit skeptical when we get good data, that the Fed will continue to be hawkish. Now they're appreciating good data because they have taken it for a fact that maybe, in fact, we're going to see the cuts in the second half, at least, of next year. So soft landing is what we're bracing for on the global landscape. Now the flows, the SIPs, they continue to remain very, very strong. And kudos to all of you, because now that flow number, the SIP number, has moved to around 17,000 crores odd. I was taking a look at November 2020 or November 2019. This number was half of the 17,000 crores. So very good going. Keep the faith. You're buying the Indian markets for a long term. Keep that going. The FI flows, remember, in November, they turned buyers and we were quite happy about that. But if you compare us with the Korean market, the Taiwanese index, well, actually, the flows that came into India were relatively lower. In December, though, it's higher than the other markets. So that's showing you the FI interest is back out here. What do they do in the F&O market? Well, they added some longs, they covered some shorts. And in a matter of a week, you see their positioning going from a net short position of more than 50,000 contracts to a net long position of more than 36,000 contracts. In a week, you've seen a 90,000 contract swing. So that's comes up for you on the screen as well. Two strikes have a fair bit of open interest. 21,000 call, 20,900 put. So you just plug in those numbers out there going by the premium. By the way, the Nifty ended higher in Friday's trading session, but the 21,000 call, if you bought it, you didn't make any money because the premium didn't move. That's telling you that it's writing at those levels. On the 20,900 put as well, there was some signs of writing out. Then the last few days, when you go to 20,850, the markets have bounced out there, either 50 or 100 points odd. So the last few days, lows should come up for you on the screen, which brings us to the levels then. Let's get those lows up for you. Yeah, so that's 20,850. The levels you're looking at, 20,700, 20,850, crucial support zone. On the upside, since the 21,000 call is seeing a fair bit of open interest, 21,110, that becomes a bit of a resistance zone. But just to sum things up, I want to pull up the Nifty and the Nifty Bank for the past week. After very, very long, you had the Nifty Bank that was actually outperforming the Nifty. And that's very, very heartening because that's, talking about bulk of the index that wasn't, participating, the banking, the financial names, and they are participating. Good news. And HDFC Bank, what do you say about that one? A value stock. Remember, if you're buying the stock, it's a portfolio stock. And it's going to be the one that's going to be a very, very important constituent of the Nifty and the Nifty Bank. And even after this small 6% move, well, valuation-wise, the largest name on the Nifty is still trading at a discount in comparison to its long-term averages. So HDFC Bank is the stock to watch for the remaining of 2023. And dare I say, it could be the stock of 2024 as well. Keep an eye out on that one. After a while, we're seeing some shorts getting covered and genuine delivery-based buying on that name. The GIFT 50 suggests a flattish opening. Maintain a long bias. Near-term stop loss, 20,850.
All right. Well, we'll keep an eye out on those levels, those numbers. It's a big week. It's also going to get quieter and quieter, mind you, as we head into the end of the year. So volumes, etc., as it always happens, will take a bit of a backseat. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show today. We get you updates from markets across the globe. Ed Yardini of Yardini Research will join in to discuss the global trade setup. A little later after that, our research team will get you CNBC TV18's list of top 10 stocks for the day. At 8:30, we have Prakash Devan joining in with what he likes and what he'd like to bet on right now.
All right, let's kickstart the show with getting you some views on the equities front. We have Chetan Seth of Nomura, who says a hotter than expected US payrolls report did not appear to hurt US equities in Friday trading. He says equity investors in the US are likely treated this report as good news is good news for stocks, i.e. a resilient economy against the backdrop where the Fed will likely embark on preemptive rate cuts and thus engineer a soft landing. He adds, unless the Fed this week manages to come up with a hawkish surprise, the soft landing theme should continue to support some larger stock markets in Asia, ex-Japan, such as Korea, Taiwan and India.
All right, let's get you some views on the rupee as well. B. Prasanna of ICICI Bank says that faster rate cut expectations and easing yields got a pushback from an all-round and better than expected jobs data on Friday in the US. Consequently, the dollar recovered, especially against emerging market currencies, while expectations of Bank of Japan exiting negative rate regime supported the yen. Back home, the MPC outcome was neutral for the rupee, though he expects the rupee to be under pressure from stronger US data, the resumption of portfolio inflows, lower crude and RBI's intervention, which will keep it within a range, as he sees it, between 83.25 to 83.55 to the USD.
All right, and on the bonds, Prasanna says global yields reversed marginally post a stronger than expected labor data. Commodity prices, particularly crude, softened further owing to weak demand outlook. Local yields, however, continue to consolidate within a narrow range despite the MPC outcome being dovish at the margin. The OMO sales risk remains benign in the near term as liquidity moves back into deficit. He expects bonds to trade sideways with the 10-year benchmark likely to trade in a range of 7.2 to 7.3% range.
Well, we've got a lot of stock-specific action to track for you. We'll get to that in just a bit for now, but let's run you through the list. We're looking at GMR Airports, GMR Power and Urban Infra, Mazagon Dock, PSP Projects, Subros, and Lloyds Metal. They are stocks that could be reacting to positive news flow, while on the flip side, Wipro, Dr. Reddy's, Newlin, and MedPlus Health will be reacting to negative news flow.